But first up, let's invite the management of Make Money Fine Chem. The stock has been on fire, up 25% in 2 days, up 45% this month. And this is on the back of the company reporting very strong numbers, 93% revenue growth in Q4, a margin expansion to levels of 35%, and a profit jump of 200%. Even for FY22, if you could pull those numbers up, it's a strong showing with a revenue growth of 87% and a PAT jump of 150%. The guidance for FY23 also looks very, very robust. We're now joined by Maulik Patel, the Chairman and Managing Director at Make Money Fine Chem. Maulik, thanks so much for joining in. First, if you could break down the revenue performance this quarter in terms of volumes and pricing, and your guidance, FY23 guidance of 50% revenue growth, what will that be driven by?
Yeah, good morning. This year, in this quarter, the volume growth is made in Q4. The major growth is coming from the sales realization. Volume growth is only 3%, but if you consider the overall FY22, our volume growth is 20% because of the high capex, the capex which we did 2 years back. All the products are coming in the optimum condition, optimum capacity in this current in FY22. So the results of 20% is coming from the volume, and remaining is coming from the value wise.
Okay, good morning, Maulik. Thanks a lot for joining us. This is Pavitra. You've guided for 26% margins going forward, but currently you're already at over 30%. Can you tell us why you see this coming down from 30 to around 26? And does it have anything to do with your chloralkali contribution?
Yeah, so that's a very good question. This is the best year since we started this company in 2009. So we expect this trend will continue, but this is a peak situation in terms of all the raw material costs and even in the revenue wise also. So we feel that in the longer point of view, it is difficult to comment this kind of margin. So we are expecting that in the longer point of view, it's 28% plus or minus 2%, which we have already announced in last 1 year, that we would like to continue for our longer point of view as a guidance for the long point of view.
Okay, so you're being a little conservative, and that's why you're guiding for around 26% margins, right?
That's right. That's right.
Okay.
That's right.
All right, Maulik, first of all, congratulations. These numbers are looking good. The street seems to be rewarding it as well. But now is the tough part, because now you need to keep delivering. So let's get a couple of details going then. On the realization aspect itself, give us a sense about the caustic soda prices as of today, if we compare it with the past quarter, as well as the caustic potash realizations. What are they now? How do they compare with Q4? And also give us an update on your debt number. I think it's closer to around 1,000 crores. So what is the outlook here, and what are you borrowing at currently? Go ahead.
Yeah. So, giving you the last question first, our long-term debt is around 909 crore. Okay. And looking at, the cash flow which is going to generate from our all three projects, which is epichlorohydrin, chlorinated CPVC, and the caustic soda expansion, which is going to commission from next quarter. So our next year onwards, our cash generation will be very high. So in the chlorotoluene project, which we have announced already, we are planning to do it only on the internal accrual basis. So we are expecting long-term debt will not increase. On the longer point of view, the guidance we are giving, it will not increase more than 2.
Okay, and what about the realization? Yeah, go ahead. Realization.
And the caustic soda realization, which you mentioned, this year in the FY22, the growth in the sales is happening, the value wise, it is 90% in the caustic soda business and 80% in the derivative business. And the caustic potash, because of the KCL, which is majority the export is happening from the Russia and the Ukraine region. So the worldwide, the KCL price, which is a raw material for the caustic potash, has gone up drastically. So because of that, the KOH realization is also increased in terms of the value.
Maulik, coming to the FY23 guidance, on the top line, you're guiding for a 50% revenue growth. Can you tell us your expectation of volume growth in that and realization? Because last year, out of that 87% growth, you're saying only 20% came from volume. The balance 67% is actually due to higher realizations. So, can you talk about the FY23 revenue guidance and the breakup there?
Yeah, in FY23, as I mentioned, 2 years back, we announced 3 projects. One is chlorinated CPVC, epichlorohydrin, which is about to commission in next couple of months, and caustic soda expansion. So we are expecting this major volume growth will happen in the chlorinated CPVC as well as in epichlorohydrin along with the caustic soda expansion. So these three will generate 20% volume growth and the 50% revenue because of the we have a high this epichlorohydrin and the CPVC is a our asset turnover ratio is very high. So we are expecting value from epichlorohydrin as well as chlorinated PVC as well, based on the current conditions.
Okay, can you also take us through what your capacity utilization is looking like right now? We already saw it go up to around 87% in FY22 from the last year. Can you tell us how much it is likely to go up now? Are we still at 87%?
Yeah, currently we are running our plant operational, overall we are at 87% and we can go maximum up to 90% as Q4 we have already achieved. So that we are going to continue. The major volume growth will come from all three capex, which is going to result in next 3 months.
Okay.
In next financial year, along with FY23 and FY24. Because in chemical plants, gradually it increase the capacity. So we commission all 3 plants. Gradually in this financial year, probably it will be around close to 50% will achieve the capacity. And in FY24 on full year basis, all 3 plants will be on the optimum capacity.
Okay, all right. Just confirming a couple of numbers that growth of 50%, 20% will be volume, the remaining will be value for the coming year.
That's right. Yeah.
Okay, all right. And also your debt is 909 crores, but your finance cost in the last year was only around 44 crores, your interest cost. What rate are you borrowing at?
So we are, almost you can say it's sub 7.
Sub 7%. Okay, all right. And you briefly mentioned about this foray into chlorotoluene, I think so, if I got that right. You're looking at this new segment that you're looking at in the next couple of years. Now, I understand that the raw material will be toluene, right? And I think there's already another company that's into this business, that is Aarti. So my question to you is, from where do you source the raw material that's toluene for this? Go ahead.
See, toluene it is coming out from the refinery. It is readily available worldwide as well as in the domestic also.
Okay, all right.
It is not just, yeah.
So sourcing of the raw material is no problem. What about chlorotoluene? You're sounding quite optimistic about this. So what is the market size and what kind of a market share are you looking at? And who's the competitor out there with the market share? Go ahead.
The many people wanted to enter into chlorotoluene business because as of now, India is completely, these products are completely import substitute. There is no manufacturer as of now in India. So we are the first one who are entering into the chlorotoluene because we are completely backward integrated as so one raw material is toluene, another is a chlorine. So for chlorine, we are completely backward integrated in our chloralkali plant. So this is going to be additional strength what we are going to have in the chlorotoluene business. And along with this, we are also building up a R&D center for the chlorotoluene business in near Ahmedabad.
So how much will chlorotoluene contribute? You have set a 5-year vision of achieving 5,000 crore revenue by FY27. Can you tell us how you plan to achieve it and what will be the contribution of the individual segments and products?
Yeah, so if you can see what all 3 projects which we have announced, epichlorohydrin, chlorinated CPVC and the caustic soda expansion, if current condition will continue, the current price the crude oil will be continue, then definitely we can reach at optimum level in FY24, we can reach close to 2,800 or 3,000 crore odd. And once we commission in Q4 2024, we commission the chlorotoluene business at the optimum capacity of chlorotoluene, which is phase 1 expansion, which we have already announced of chlorotoluene, because chlorotoluene is a very long value chain and many products. So in phase 1, we can achieve around 350 crores, 300 crores kind of revenue. So we can reach easily 3,300 crores. And the remaining projects we are under study and 5 years vision, we are going to continue announce additional projects as the board will approve in coming times.
It'll all be organic or will there be some inorganic growth as well towards that 5,000 crore mark?
No, it is everything, we are completely integrated complex and we have wanted to continue our integrated complex strategy, which is, chlorine and hydrogen derivatives we will grow in coming times to reach at 5,000 crore. So till 5,000 crore, we don't have any plan to inorganic growth.
Okay, and also your current promoter holds close to around 71%. But explain this to us. Around 60% of that is locked in. Going by the BSE notice, what is the meaning of that? Why is it locked in?
Actually, I think I need to check that point.
Okay. All right. No worries. Thanks so much, Maulik, for joining in. You're sounding reasonably optimistic about business. You've given us a fair bit of detail, and boy, doesn't the stock market